Welcome to the Southeast Retirement Planners Podcast, where we will go beyond the balance sheet with our guests, not only to share from our personal experience as financial advisors of over 25 plus years, but also to learn from our guests about the issues and topics that are important to them. Our firm specializes in taking care of the financial plans for individuals and small businesses by helping our clients identify their individual goals and taking a conservative and ongoing approach to helping accomplish them. We are located in Hickory, North Carolina, and look forward to continuing to serve our clients and our community. Thank you for joining us. We hope you enjoyed this week's episode.
Thank you, everyone, for attending today. I'm Ryan Edwards with Southeast Retirement Planners, and I'm sitting here with my business partner, of course, Les Stewart, here for the Southeast Retirement Podcast. And today with us, we have Brian Koehl from Corebridge Financial. He's the regional vice president. He's a longtime friend of ours and contact in the industry. So we'd like to welcome him today. Thank you, Brian, for being with us.
Yeah. Well, thanks for having me. I appreciate it.
Well, yeah, we're pumped. Me and Les were talking about this. I mean, we've gone back a number of years. We've
been working together probably over 12 years now, I think.
Yeah, I was going to say 12, 15 years probably.
Yeah. We've had some good meals together. They've included ham sandwiches all the way to...
Still hear about that ham sandwich.
It's
inside joke.
Also the connoisseur of all things lettuce and moonshine. So...
Yeah, we've had some
You've
good
had
stories,
experience, yes, an experience with it. Nothing that could get any of us in trouble. But nonetheless, so you've been in the industry a long time on the insurance side or life insurance side or life insurance style companies, I guess, that offer annuities.
Yes,
and therein lies where we've worked with you in the past and. Have gained a lot of knowledge just based off your time in the industry as well, and that's what me and Les were talking about. Really, you're out there and on a daily basis you call on guys like us, right? So tell us what that looks like.
Yeah, absolutely. So I've been doing this, believe it or not. This is my 22nd year of dealing with annuities. So kind of had a financial background growing up. My dad was a financial advisor and went to work for Hartford, was the first company in dealing with annuities, and now with a company called Corebridge Financial. And just so you know what I do, basically I have a territory, North and South Carolina, travel around, meet with financial advisors, such as yourselves, and really get you up to speed with how our products work, how annuities in general work and should be positioned with certain clients in certain situations, and just really keep you guys up to speed with cutting-edge new products that are coming along out there.
Okay.
So speaking of products, we were talking about this when we heard you were coming on board here, and we tell this to clients all the time that there's no products necessarily good for everybody, and no products necessarily bad for everybody. It's it depends on what your situation is, and so as we go into this, we're not saying that annuities are the perfect thing for your particular situation, but they can be a perfect fit for other people's.
Sure.
So,
yeah, I always say that annuities are not a one size fits all. There's a bunch of different types of annuities. First of all, people don't really realize that. But also that, an annuity could be a really great product for somebody in a certain situation, but the exact same product may be not a great fit for somebody because their financial situation is totally opposite, totally different. So, yeah, it's really about making sure that, like any type of investment, it's the right fit for the right person.
Right.
So what are some of the things you're out there hearing now? I know we've had a volatile market, obviously, and people have been concerned, but then also your time in the business much marries our time in the industry.
Yeah.
We've been through good times. We've been through a couple bad ones or not so good times. But right now, what are some of the things you're hearing from that are out there? Because you're not just in Hickory. You're throughout a larger area.
Yeah.
What's some of the concerns? Yeah.
It's interesting because, again, I cover a big geographical area, so I see, rural areas. I see the big urban areas like Charlotte, and, I can be seeing an advisor in a town with 3,000 people. And there's a common thread there, I think, right now with a lot of clients and advisors. It's everybody's a little bit concerned. Everybody's a little bit, anxious about where we're headed. Obviously, we've had kind of a rough go as far as inflation was the big thing that people felt first of all. We felt things getting more expensive, putting gas in our car, buying groceries, and everybody felt that. And then on top of that, we started to see the market go down. And we really hadn't seen that for a while since COVID started. But when it happened with COVID, it hit us hard, but it recovered so quickly. So I think by the time we started to feel the pain, it was already starting to feel a lot better.
Right.
Whereas this has obviously lasted quite a bit longer. It's been going on for over 12 months now. Of course, the market was down, 20% last year when you talk about the S&P. And so I think the longer that this drags on, the sense I'm getting is that I think people are thinking more about protecting assets rather than prior to this market. It was all about just growing assets. But when you don't feel the pain of a bad market, you kind of lose that feeling of what it feels like. And I think we're all getting that back right now.
Mm-hmm.
Right.
Yeah, and we talk about that all the time. It's one reason people like us can be valuable to investors and clients is, to have a process that you stick with it. If not, and greed will take over, and your, as whether it's protection or growth, figure out what is the best situation and kind of stick with the theme and don't vary based on those short blips in the stock market,
Yeah,
so.
Exactly. I think the best value that you guys bring is figuring out a client's situation, getting to know that client, obviously, figuring out where they are, where they want to get to, and then building that plan. And once you have the plan in place, then everything else gets quite a bit easier. Then you can kind of fit the products to fit that plan. So, what you guys do and putting together that plan is obviously critical.
Right. Now, I know that there's the different annuities that are out there. We're very aware, but you're on the front lines and with all the different things. But in general terms, what would the different products really? What you're trying to solve for? Could it really be two words and add more? Could it be income and protection? Or protection of income?
Well, there's really two major themes when it comes to annuities and protection. It's protecting income, making sure that your income lasts the rest of your life, and it's protecting principal. So there are different annuities out there that do different things, but the main areas that we see these products being used are for retirees that don't work anymore, and they're not getting a paycheck from their employer, so they have to create their own paycheck, and that's what an annuity does. Make sure that you get an income that will last the rest of your life. Doesn't matter if your assets go to zero, it's going to keep paying you a paycheck. And then the other side of that is protecting principal. So there are some clients that they're not in that income phase yet. They're not ready to retire. But they say, I just want something where I don't see a lot of fluctuation on my assets. I want to make sure that I don't see, a market decrease of 30%, that I see my assets decrease 30%. But yet I want to be able to have upside better than a CD or better than a money market. And those are typically assets that will protect your principal. Obviously, the issue with that is you don't get much upside growth opportunity. So these annuities are interesting because they can give you upside growth opportunity, but still protect your principal.
We try to always. Anytime someone's going to give you a guarantee, you gotta really dive into something, because that word sometimes is used way too loosely by individuals that don't dive into a client situation. And while they do offer some guarantees backed by the claims paying ability of the insurance company, but that is a good term. But it usually comes, you're giving up something, and usually that's in the form of liquidity.
Sure.
At a certain level, and for a period of time. Mm-hmm. So maybe, I don't know if we can need to expand on that much, but there's always, I guess the importance is making sure you know the details.
Absolutely. Absolutely. So, with an annuity, with the guaranteed income products that I mentioned, those are typically longer term products. Those are products that you're probably going to hold for a longer period of time, because it is meant for income that's going to last for a long time. The protection of principal products, though, you can own those for as little as 5 years or 7 years, but 5 years is the shortest time period, and you can pull out some of your principal each year. You can get to 10% of your money. So again, it's meant to be kind of a intermediate type investment. It's not something that you have access to all your principal in the first year, but it's not something that you got to sign your life away and give that money away for the next 20 years. So, but yeah, with anything, there's always trade-offs, and that's the other thing is, we know when it comes to the stock market, over time, typically the best returns come from the market versus some type of fixed investment. The trade-off is volatility, though, and risk. With these annuities that protect your principal, what you're giving up is you don't have as much upside opportunity. Right. So that's one of the trade-offs. Right. But again, you don't experience that volatility on the downside.
Yeah. I think, let's go ahead. You had
Well, no, I was just going to say, I would kind of expand on what we talk about, sequence of returns a lot when we're talking with retirees, and you don't want to see those big pullbacks in value from a market downturn when in your first couple of years of retirement, if you can help it, because it's not like you can stop taking income if you're needing to live on it. So that's where a product like an annuity or something like that, or something that gives you a guaranteed type income, or some sort of value preservation or something like that can really help in that situation for retirees. They can do it. There's a lot of other scenarios too, but
absolutely.
We've seen, with retirees, it's very important. I think this is kind of what we appreciate. When we'll maybe have a case, we'll call an individual like Brian, and Brian's been really good to converse with us back and forth. I think you had a case here recently that you ran up to Brian, and I think it just wasn't a fit. I mean, so you are in the area of sales, but at the same time, we try to align ourselves with individuals that do it the right way. And I think diving into one situation and really getting to know the clients, what are their needs, what are their asset levels, what's their income needs, and then also how, I guess, emotional they when it comes to their money, so that do they need that security, or are they able to handle the pullbacks in the market? We just did a workshop the other night, and one of the slides, I think it was Fidelity compiled it, and it had a slide on it that says, if you look back since 1926, the average annual return in the S&P 500 has been around 8%. But, and nobody can debate this is the facts, that you if you'd have stayed invested that whole period of time, you'd have been around that approximate average annual return. However, you had to deal with 3 times of the market pulling back at least 5% during the course of a year. Once every year, it coming back 10%, and then all the way down to once every 6 years, it pulling back over 20%. So to get one, you have to be able to deal with the other.
Sure.
And emotionally, individuals, I think that's where we come in. Let's really try to make sure that what fits right for a particular client situation, because that's anytime. You can deal with the warm and fuzzies, I call it, of an annuity with the word guarantee, but you got to make sure that it is appropriate because of their need for money in the future. So
absolutely. I use my mom for an example. She's never been able to invest in the market. And she knows the business I'm in, and I've explained to her over and over again. But if she were in the market right now and she saw her investments drop by 20%, she wouldn't be able to handle that. And she knows that. And so someone like Mom, when you can say, doesn't matter what if the market's down 50%, you're not going to see your account go down. Those are the people that, are going to be interested in something like this. There's other people that they understand the market's average 8% and they don't mind seeing a minus 20% to be able to get that 8%. So again, everybody's different, and it's not going to work for everybody.
Yeah. You don't want to be average. An average investor, you don't want Mom pulling out of the market. If she was in the market,
yeah,
the average investor makes the decision to get out at the perfectly wrong time, which is usually at the bottom. That's what we say.
Absolutely.
So, you don't want to buy high and sell low, as they say. So, well, that's good. I tell you what, I think we've covered a number of things today that's been beneficial, and we're pumped to have you on here today.
Well, I'm excited to be here. Thanks for the invitation, and I'll, anytime you have questions about annuities or because it does come up quite a bit. I hear all the time advisors say, I have a client that heard this or that about an annuity, and we have to explain to them that that's not necessarily all types of annuities, what you heard about. So there is a lot of confusion out there about this stuff. So it's good to kind of talk to your folks and get the word out.
And I think as a consumer, you need to make sure you understand the annuity that you're or whatever the investment, whether it's annuity or a stock or a mutual fund, make sure that you understand it to the point you're comfortable with it, and don't hesitate to ask your advisor to review it with you the next, a year later too, because I know, I can't remember how my auto insurance works sometimes, I need to get it re-explained to me.
Exactly.
So I can focus on the rest of my life, but, ask a good advisors will be glad to revisit that with you as often as you need to. So
absolutely.
Yeah.
That's good. Well, we appreciate the time, and we thank everyone for listening today. If you have any questions, as we always offer, if you don't currently work with us at Southeast Retirement Planners, we'd, find us online at seretirementplanners.com. That's our website, and you can find out more about us and the services we provide. You can also find this and our previous podcasts that are recorded there, just on the tab line at the top. So if you don't currently work with us, we always offer a complimentary financial checkup, we call it, where we sit down and get to know your situation. You get to know us a little bit better. So we'd encourage you to reach out to us if the timing's right for you, and we'd love to sit down with you. So for now, we appreciate you coming today, and thank you, Brian, once again. Take care.
Securities and advisory services offered through LPL Financial, a registered investment advisor. Member of FINRA, SIPC. Southeast Retirement Planners is not affiliated with LPL Financial or registered as a broker-dealer or investment advisor.